Very good afternoon. Asian markets traded mixed today, but the winner on the day was Japan, leading the charge in part boosted by upbeat corporate earnings and signs that the US's tariffs on Japanese exports could be lifted. The Nikkei share average rose by 1.85%. The Hang Seng index declined by 0.9%, while the Shanghai Composite Index fell by 0.12%. Over in the US, stocks largely erased the gains registered in the previous session, although the Nasdaq bucked the trend and closed in positive territory. Lending support to the tech sector, President Donald Trump announced a 100% tariff on imported chips, which excludes US-based manufacturers. Meanwhile, Apple's share continued its advance, up over 3% following its $100 billion investment announcement in the US. And as has been the theme for much of the week, market players are now expecting the US Fed to cut rates in September. The Dow Jones Industrial Average declined by 0.51%. The S&P 500 closed down 0.08%, while the tech-heavy Nasdaq rose by 0.35%. Looking at local indicators, we see that the all-share index is trading up 0.2% at 100,839 index points. On the currency front, we see that the rand is trading at 17.72 against the US dollar, 20.63 vis-a-vis the euro, and 23.82 against the British pound. Commodity front, we see that gold is trading at $3,395 an ounce, platinum at $1,333 an ounce, while Brent crude oil is trading at $66.74 a barrel. All right, let's get into conversation now with James Turp. He's the head of fixed income investment strategy portfolio manager at Sanlam Investments. Thank you so much, sir, for joining us. So markets are supposed to price according to what they foresee. But even though there are swings in, the price movements of stocks at the moment, it just doesn't seem like they're pricing for a possible recession down the line, like what we saw at the beginning of April after those Liberation Day tariffs were actually announced. What's your reading?
Thanks so much for having me, Nompu. Great to be back. And that's a very interesting question. I was just the other day looking at the probabilities of a US recession, and it's actually, it's come off a little bit, but over the course of the year, it's moved up from around 20% at the beginning of the year to 40% chance of recession. It's now sitting at 35%. That's by a big statistical agency in the US. So they're saying 35% chance. But there's been a few things in the mix recently to perhaps change that feeling somewhat. Not only increased tariffs, of course, and those starting to crystallize after last week, Friday, but also those labor figures that came out last week, Friday, as well, and the revisions to the previous labor numbers, showing that the US economy is indeed starting to feel some pressure. So it's so important now for us to keep a look at all sorts of indicators to see whether that probability starts going higher again.
So with the negativity associated with the US tariffs, one would have thought that this would spell rand weakness, but somehow the local currency has managed to hold its own. Is that a factor of the higher gold price that we're seeing, or other factors at play?
So the gold price, Nompu, does often have a high correlation to the rand. But I think this rand strength that we're seeing at the moment, this backing of the trend of normal rand correlation, is more around US foreign policy and their own position to have a weaker dollar to suit their own deficits and fiscal balances over there. So it's actually a deliberate attempt in one of their policies is to get the dollar weaker. So that's what it's actually worked in our favor to some degree too, making emerging market local currency debt appealing globally at the moment because of this trend of dollar weakness, adding an extra shot in the arm for investors of emerging market debt.
So we look back at last week when the Reserve Bank made that announcement around the unofficial 3% inflation target, which was a bit of a shocker. And then even more shocking was Finance Minister Enoch Godongwana coming out and saying, well, you know, we don't approve of this unilateral behavior. You know, conversations are continuing, and until such time, we will make a call, that is himself and the cabinet, we will make a call on what the policy is. So I just wondered how this has filtered through into the bond market, because of course the bond market looks at the rand, it looks at the inflation rate and so on.
That's right. We've been talking about this extensively here at Sanlam Investments, just what this means for our own factoring in of inflation going forward. Now, the Reserve Bank's position is that a lot of the outcomes of inflation are influenced by their own open market communications. So they have had great success in getting the inflation rate down to the middle of the target band from their explicit targeting 4.5% in 2017. And they're talking about taking advantage of disinflation, using this opportunity of where, whilst inflation is low at 3% year on year at the moment, of then changing that, of trying to influence the market again, that inflation will be lower over the long term. And in doing that, do what this economy desperately needs, is getting interest rates lower and growth higher. But there's a small opportunity cost in the short run by their estimation to GDP. But what we're thinking about more is the adjustment to get your terminal in the forecast period inflation to 3%. Your inputs need to change, and most importantly, you'd expect tighter monetary policy to be one of those. But that's not in the model at the moment. The model says that rates are sufficiently restrictive at the moment to facilitate lower inflation and in turn bring interest rates down at the same time. National Treasury not agreeing with it. Of course, they've got to do their budgeting process, and they build increased revenue on inflation forecasts. So it is a significant influence on the budgeting process. So it's going to be interesting one to watch, of course, but the reaction from the market has been confidence in the central bank. Bonds have liked it, bond curve has flattened, and bonds have rallied in response to that. Given up a little bit this week, but overall a positive response, showing credibility and faith in the central bank.
All right, James, thanks very much for that. We're going to leave it there. We are covering the South African Reserve Bank's annual general meeting today, where my colleagues will be posing that question to the Reserve Bank governor around his reaction to the finance minister's reaction last week when he was unhappy about what he deemed unilateral conduct.